All right, it's Monday, April 24th. This is an end of the day SPY recap, and today we end up with, again, a very neutral bar that doesn't really go much of anywhere. It's a slight two-up bar that closed slightly green, and it kind of sets the stage for, a breakout one way or the other, with today being kind of tricky again. First of all, coming into the day, we discussed how this is going to be a battle between whether or not this weekly bar here, this little doji bar, follows through the downside and starts possibly the rejection of the monthly two-up bar to reach its target to the downside, or is this going to be a situation where the last week of the month we kind of hold in here and then start up and eventually work towards our green line, which is the monthly, that's the two-up target of the month where we have, 5 trading days to go. So we're kind of watching that. We don't really get the two down weekly start to the week. We didn't break below the low of the previous week, and we never broke below. If you look at the 15-minute chart, the pre-market range was down here, the low and the high up here between the blue lines. So we never really started down below the pre-market lows to get a new weekly, two down bar. So we were starting near the highs, and the first bar definitely started up strong and then closed kind of green, and the second bar just kind of paused. So now you're sitting here ready to kind of go long if you can break above that first bar high, which you could see you technically did. So at that point, you're kind of you're almost watching the 5-minute chart, because, the first 3 bars go up and then it pauses. Then it goes down a little bit, and you're kind of watching for that breakout up here. And you could see, maybe if you wanted to get a 2 down, 2 up on this green, red to green 5-minute, anticipating that, you could have tried that. Also, if you're watching it closely, you're getting ready for that breakout. If you could see here, it just touched it and came right back down. Then it tried up again, touched it, came right back down. So the bottom line is, if you were getting long in here, which it really technically triggered, but it really didn't trigger because you didn't really hold above that. But if you did that, you're going to have to stop yourself out above the midpoint of the first bar, which is kind of right below there. So if you got long in here, you have to take your small loss in here just in case. And then what the market did on the 15-minute chart, after really failing to break out, and again, you would take your loss here if you did try to get long and anticipate a move to the upside. It kind of came all the way down, never really even took out the pre-market lows, but got very close to there, and then had a big green bar, and for the rest of the day started up. So typical choppy day. You also have to know you're in an environment here where earnings are coming out in the next few days, and there's a lot of hesitation, it seems, with the market. Also, the market's in this tight range in general. We've, been discussing that for a while. It's really not going anywhere. We have earnings coming out. So it's a kind of a tricky environment. But if anything, I see this as two kind of inside, almost like 2 inside days. So at this point, a break above here tomorrow, which would stay above the yellow line, which is the open of the week, you would have to try that to the long side, even with earnings coming out. And again, if this somehow fails up in here, almost like, let's say it starts up and fails and comes back all the way back through, then you got to use that breakout to the downside and kind of a sense that this is going to be a 2 down week. You got to anticipate at this point, are you going to be breaking up and continuing or breaking down and getting the 2 down week to bring us down there. And maybe this isn't going to happen for a few days until some of the earnings comes out, and it's going to be tricky trading, but that's all you can do at this point. You got to kind of know your environment also. So if you don't get immediate follow through on some of these trades, you almost have to be ready to get right out. And again, you're going to have to look at the structure on the 15 minutes. If you get long in here, you just want to see green going up. If you get, it was actually a good opportunity once you saw the failure in here and you got stopped out to kind of get short and just to see, what would develop. I mean, if you essentially were going to take out this intraday low, and then this was the morning move as it turned out, but it didn't really get anywhere near, the low of yesterday or the breakout point. So, it was just kind of a morning move. If you wanted to really even play the failure, that was a possibility. Although at that, given that you kind of went up above the high of yesterday and then kind of failed on that first bar move. So there was an opportunity. I actually was just trading Tesla to the short side. So I was kind of biased more to the downside after, and also the QQQs weren't as strong as the S&P. So, I wasn't really excited to get long on this, watching some of the other stocks and the rest of the, the markets. But anyway, that's where we stand now. It's kind of just very choppy inside these last few days, and we're just going to have to look for a breakout either the up or downside. And, that will either confirm the weekly chart starting back towards its highs or failing and then starting a 2 down week.